million. That's somebody. And he started making computers on his bed in college and selling them because they were better than other computers. And I said, how did you do that? He said, well, I did it and I just never stopped. It just kept going. So go out and buy a Dell. They're great.
The Trump angle matters because investors love signals. When a sitting president supports American technology companies, talks about domestic industry, and pushes American AI infrastructure, the market pays attention. Dell fits perfectly into that story. It is an American company. It sells to businesses, it sells to schools, it sells to government agencies, and most importantly, it sells the physical infrastructure needed for artificial intelligence: servers, storage, data center equipment, enterprise hardware. So when Trump's name becomes connected to Dell, the stock gets another emotional push. But let's be clear, Trump is not the full reason Dell stock went up. Trump is the headline, AI is the engine, and earnings were the explosion. Dell just reported a massive quarter. Revenue came in around $43.8 billion. That was up about 88% year over year. Adjusted earnings per share came in at $4.86. That was far above Wall Street expectations. This was not a small beat. This was the kind of earnings report that forces investors to completely reprice a company. And the biggest reason was simple: AI servers. Dell reported around $16.1 billion of AI server revenue in the quarter. AI server orders jumped massively. Some reports said AI-optimized server orders rose around 757% year over year. That is not normal growth. That is boom-level growth. This is why the market reacted so aggressively. Investors are no longer just looking at Dell as a PC company. They are looking at Dell as a company that may help build the physical backbone of the AI economy. But the most important number may not even be revenue. It may be backlog. Dell exited the quarter with around $51.3 billion in AI backlog. Backlog means customers have already placed orders that Dell still needs to fulfill. That matters because it gives investors visibility into future revenue. In simple terms, Wall Street is thinking, this is not just one good quarter. Dell may already have a pipeline of future business waiting to be delivered. That is extremely important for a stock because stocks do not only move based on what happened yesterday. They move based on what investors believe will happen tomorrow. And right now, investors believe Dell's AI server business could keep growing. Dell also raised its expectations. The company now expects AI server revenue to reach about $60 billion in fiscal 2027. Before that, the forecast was around $50 billion. That is a huge upgrade. And Dell also raised its full-year revenue forecast to around $165 to $169 billion. Adjusted EPS guidance was raised to around $17.90. This is why the stock moved so hard. The market is not just reacting to current earnings. The market is reacting to Dell saying, we see more demand, we see more AI growth, we see more revenue ahead. And when a company raises guidance that aggressively, big money starts paying attention. Now here is the real question. What will Dell do with all this momentum and cash flow? There are several major areas. First, Dell will continue investing in AI infrastructure. That means more AI servers, more data center hardware, more storage, more networking, more enterprise systems. Dell is trying to become one of the key suppliers for companies building AI data centers. This is where the real money is. Because AI is not just software. AI needs physical machines. It needs chips. It needs servers. It needs cooling. It needs power. It needs massive data centers. And Dell is selling the equipment that helps make that possible. Second, Dell can return more money to shareholders. Dell already announced a 20% increase in its cash dividend. It also increased its share repurchase authorization by $10 billion. That means Dell can buy back its own stock. Buybacks can support the stock price because they reduce the number of shares in the market. And when fewer shares exist, earnings per share can look stronger. This is one reason investors like companies with strong cash flow. They can grow the business and reward shareholders at the same time. Third, Dell can strengthen its balance sheet. A company with strong cash generation can reduce debt, improve flexibility, and protect itself during market slowdowns. That matters because AI hardware is a very competitive business. Margins can be tight, supply chains can be complicated, and customers can be demanding. So Dell needs financial strength if it wants to keep competing at the highest level. There is also the government side. Dell recently secured a major $9.7 billion 5-year agreement connected to the U.S. Department of Defense. This is important because government contracts can provide credibility and long-term business opportunities. But investors should understand this clearly. This does not mean Dell receives $9.7 billion in cash immediately. It is a long-term agreement. The money comes over time, depending on execution and purchases. Still, it is powerful because it shows that Dell remains deeply connected to large enterprise and government customers. And under a political environment that favors American technology, defense technology, AI infrastructure, and domestic industrial strength, this kind of relationship matters. So why is Dell stock rising? Because the story has changed. A few years ago, Dell was seen as a mature hardware company, useful but not exciting. Today, Dell is being pulled into one of the biggest investment themes in the world, artificial intelligence infrastructure. And Dell has several things investors like: massive revenue growth, AI server demand, a $51 billion backlog, a $60 billion AI server revenue forecast, a major government contract, a dividend increase, a $10 billion buyback authorization, and political attention from Trump and the broader American industrial push. That combination is powerful, but investors need to be careful. A stock can have a great story and still be risky. Dell has already moved very fast. When a stock rises too quickly, profit-taking can happen at any time. There are also risks inside the AI server business. AI servers can have lower margins than investors expect. Component costs can rise. Memory shortages can create pressure. Tariffs and trade policy can hurt supply chains. And if AI spending slows down, Dell's growth could disappoint. So this is not a risk-free story. This is a high-momentum AI infrastructure trade. And high momentum works both ways. It can go up fast, and it can fall fast. So here is the simple breakdown. Trump gave Dell attention. AI gave Dell growth. Earnings gave Dell proof. And the $51 billion backlog gave investors confidence that the story may continue. Dell is no longer just a computer company in the eyes of Wall Street. It is becoming a major player in AI infrastructure. The big question now is, can Dell turn this AI demand into long-term profit? Or is the stock already pricing in too much good news? That is what investors need to watch next. If you want more stock market breakdowns like this, make sure to like this video, subscribe to the channel, and comment below.